Listen, silver just blew past $91. Gold sitting near 4,600. And if you're watching financial media right now, they're celebrating like we just won something. We didn't win anything. What you're watching isn't a rally, it's a warning shot. It's your savings account sending up a distress flare before it disappears completely. Because here's what nobody's telling you. That silver price. It's not measuring silver's strength, it's measuring the dollar's death spiral, and phase 2. Phase 2 is when that slow death spiral turns into a catastrophic collapse. When paper promises start burning up. When the banks that told you everything was fine suddenly can't deliver the metal they said they had. I'm going to show you exactly how this happens, who engineered it, and why the only people who survive what's coming are the ones holding physical metal in their hands right now. Not later. Not when it's convenient. Right now. Because the window, it's not just closing. It slammed shut for a lot of people on January 1st. Here's what I need you to understand first. The dollar isn't collapsing because of some future crisis we need to worry about. It's collapsing right now, today. While politicians smile and tell you everything's under control, the dollar index has been bleeding out for months. It fell from 110 down to 99. That's not a correction, that's a controlled demolition. And every point it drops, your purchasing power evaporates. Think about what that means for a second. Every dollar you've saved, every dollar in your checking account, every dollar you think is safe in a bank somewhere, just lost 10% of its value. You didn't get a notice in the mail. You didn't get a vote. It just happened. And the people running this show, they have to keep it going, because the US government needs to refinance $8 trillion of debt this year. $8 trillion? They can't stop printing. They can't raise rates without triggering a debt crisis. They're trapped in a corner with no way out except to keep destroying the currency. So what happens when people realize the money itself is burning? They run to what's real. They run to gold and silver. Except this time, there's a problem nobody saw coming. There isn't enough physical metal to go around. Let me tell you about January 1st, 2026. That's the day China changed everything. They implemented export controls on silver. Now, if you want silver out of China, you need government approval, a license, and China's making it very clear they're keeping silver for themselves. Why does that matter? Because China isn't just a player in the silver market. They're one of the world's largest producers and exporters. When they cut off supply to the rest of the world, they're not doing it because they're worried about running out of silver. They're doing it because they know what's coming. They know the dollar's collapsing. They know the West is desperate for hard assets. And they're making sure that when this thing finally breaks, they're the ones holding the physical metal while everyone else is holding worthless paper contracts. This is economic warfare dressed up as trade policy. And it's not just China. Central banks around the world have been accumulating gold for 4 straight years, not slowing down, accelerating. They're buying every ounce they can get their hands on because they know what fiat currency is worth when the confidence dies. 0%. So while they're loading up on real metal, what are they telling you to do? Stay in dollars, buy bonds, trust the system. Does that sound like advice you should be following? Now here's where this gets dangerous. The silver market isn't just under pressure. It's splitting in half. And I mean that literally. There are 2 silver markets now. There's the paper market, where silver trades on screens, where contracts get bought and sold 100 times without a single ounce of metal changing hands. And then there's the physical market, where actual metal exists, where you can hold it, where it can't be printed or created out of thin air. For decades, those 2 markets moved together. The paper price and the physical price tracked each other because people believed the paper could always be converted to physical. That belief is dying. In Asia right now, physical silver is trading at premiums nobody's ever seen before. We're talking about people paying 30, 40, even 50% over the spot price just to get metal in hand. Why? Because the spot price is a lie. It's what the paper market says silver is worth. But if you actually want the metal, you're finding out the real price is much, much higher. This is what a broken market looks like. When the paper price says $91, but you can't find an ounce for under 100, 130 in some places, that's not a premium. That's the market telling you the official price is fiction. And here's the terrifying part. Most people's silver investments are paper. They own shares of an ETF. They own a futures contract. They own a promise that somewhere, in some vault, there's metal with their name on it. Except there isn't. Let me show you what's happening inside the system right now. We're going to look at 3 pieces of proof that this isn't theory. This is happening in real time. First, the vaults are hemorrhaging metal. COMEX registered silver inventory, that's the metal actually available for delivery, has collapsed by 70% since 2020. 70%. That's not a slow drain. That's a run on the vaults in slow motion. Every month, more metal disappears. It gets pulled out, moved to private storage, moved overseas, anywhere except the public vaults where people can see how little is left. The banks know what this means. When the registered inventory drops below a certain threshold, the entire paper market becomes a house of cards. Because if everyone who owns a contract decides they want delivery, there's not enough metal to go around. Not even close. Second, lease rates are screaming. Silver lease rates spiked to 39% last October. Let me put that in perspective. Normal lease rates are under 1%. Under 1%, when it costs 39% per year just to borrow silver, that's not a market signal, that's a distress signal. It means the people who need silver to settle their obligations are so desperate they'll pay any price to get it. It means the physical metal is so scarce that lending it out became incredibly valuable overnight. This doesn't happen in a healthy market. This happens when the system is breaking. Third, delivery demand is off the charts. Traders are standing for delivery on futures contracts in numbers we haven't seen before. The March contract has over 100,000 contracts in open interest. That represents 500 million ounces of silver that people are demanding, not just trading, demanding physical delivery. But here's the thing. There isn't 500 million ounces sitting in COMEX vaults ready to go. Not even close. So what happens when all those contracts come due and people want their metal? That's the question nobody wants to answer. Because the answer is the system breaks. People get cash settled against their will. They get told, sorry, we don't have your silver, here's some dollars instead. And those dollars, they're worth less every single day. Now, if you're thinking this sounds familiar, you're right. In 1980, the Hunt brothers tried to corner the silver market. They accumulated massive positions, drove the price to $50 an ounce, and then the game changed. The CFTC stepped in. They changed the rules. They implemented Silver Rule 7, which restricted leverage and forced liquidation. The Hunts couldn't meet their margin calls. The price collapsed. They went bankrupt, and for 45 years, that story's been used as a warning. Don't mess with silver, the regulators will crush you. But here's what's different now. This isn't a couple of billionaires trying to corner the market for profit. This is the entire world realizing that paper currency is dying and running toward hard assets all at once. The Hunt brothers were leveraged. They were using futures contracts, borrowing money, playing the paper game. And when the rules changed, they got destroyed because their positions were built on debt. But the people who owned physical silver back then, they survived. They held on to their metal, rode out the volatility, and kept their wealth. Today's situation is the Hunt brothers' story in reverse. The system is short. The banks are the ones who sold metal they don't have. The futures market is the one that's over-leveraged. And when this thing breaks, it's not going to be the people holding physical metal who get wiped out. It's going to be everyone holding paper promises. Think about the timing. 1980, the regulators stepped in to protect the system by crushing the Hunts. 2026, who are they going to crush? The millions of people around the world buying silver because their currency is dying. The central banks in Asia stacking metal? China, after they just cut off exports. They can't. The forces driving this are too big. This isn't a speculative bubble they can pop with a rule change. This is a monetary crisis, and the only way to protect yourself is to own the physical asset that can't be printed away. Now let me explain what Phase 2 actually means. Because most people think the crisis is high prices. They see silver at $91 and think, wow, that's expensive, that's the problem. No, high prices aren't the crisis. High prices are the symptom. The crisis is what happens after $100 when the system realizes it can't deliver. Phase 2 is when the paper market decouples completely from physical. It's when the COMEX price might say 100, but you can't find an ounce for under 150. It's when silver ETFs start restricting redemptions. It's when brokers quietly settle contracts for cash instead of metal. It's when the term force majeure starts showing up in legal notices. Let me translate that for you. Force majeure means we can't fulfill our obligations because of circumstances beyond our control. It's the escape clause written into every futures contract. And when the market is short on physical inventory, Long on paper promises, force majeure, is how they avoid delivering. They just declare an emergency, settle everything in cash at whatever price they decide is fair, and walk away. Meanwhile, you're holding dollars that are burning, while silver, the real metal, is trading at prices you can't access anymore because you can't find any. This is how wealth gets confiscated without a law being passed. You think you own silver because you bought an ETF, but when the crisis hits, you find out you own a contract that gets settled for dollars, and those dollars buy a fraction of what they used to. Phase 2 is when the smart money, the people who got physical metal early, separate completely from everyone else. They're protected. They own something real. Everyone else is left holding paper but's worth whatever the government says it's worth. And let me be very clear about something. The government, the banks, the system, they will do everything they can to preserve paper. They'll change settlement rules. They'll restrict deliveries. They'll tell you it's for market stability, for your protection, for the good of the economy. What they won't tell you is that by the time they're doing all of that, it's already too late. The metal's already gone. So what do? You get physical, not ETF shares, not futures contracts, not mining stocks, not certificates, not blockchain silver or digital tokens or any other paper promise dressed up with technology. Physical silver. Physical gold coins and bars from recognized mints that you can hold in your hand. That's it. That's the only strategy that survives what's coming. When you own physical metal, you're not depending on a counterparty. You're not depending on a bank keeping its promise. You're not depending on a government deciding whether or not you deserve your wealth. You own it. It's yours, and nobody can print more of it to dilute your holdings. Now, I know what you're thinking. Silver's already at $91. Gold's at $46.30. Did I miss it? Am I too late? Let me answer that with a question. What do you think happens to metal prices when the paper market collapses? When millions of people holding ETF shares realize they're not getting silver, they're getting cash settled. When Asia keeps bidding up physical while the West is stuck watching numbers on a screen. The price you're seeing right now isn't the top, it's the starting line for phase 2. But here's the part that should terrify you. Availability disappears before price reflects reality. Let me say that again because it's the most important sentence in this entire video. Availability disappears before price reflects reality. In 2008, during the financial crisis, you couldn't find silver coins anywhere. Dealers were sold out. Mints couldn't keep up with demand, but the price hadn't fully adjusted yet. There was a window where metal was technically affordable, but you couldn't get your hands on it. We're entering that window right now. Dealers are reporting inventory shortages. Premiums are climbing. Wait times are extending. This is what it looks like when supply is drying up, but the crowd hasn't panicked yet. When the panic comes, when the headlines start screaming about silver shortages and delivery failures, physical metal won't just be expensive. It'll be unavailable at any price. And at that point, it doesn't matter if you have money. You can't buy what doesn't exist. So the question isn't whether you can afford silver at $91. The question is, can you afford to be holding dollars when they announce there's no metal left to deliver? Look, I get it. This is heavy. This isn't how you wanted your Monday to go. You probably clicked on this video thinking you'd get some market analysis, maybe a prediction, something to think about later. But later is the problem. Later is how people lose everything. Because by the time everyone agrees this is a crisis, by the time it's safe and obvious and all your friends are talking about it, the opportunity to protect yourself is gone. The people who make it through currency collapses aren't the ones who wait for permission. They're not the ones who need 3 experts to confirm it's okay. They're the ones who see what's happening, trust their instincts, and act. Your instincts are screaming at you right now. You feel it. Something's wrong. The system doesn't make sense anymore. The numbers don't add up. The promises don't feel solid. That feeling, that's not paranoia. That's pattern recognition. You've lived through enough to know when something's breaking. And what's breaking right now is the entire foundation of paper money. So here's what I need you to do. Hit that subscribe button. Because what happens over the next few months is going to be the most important financial story of our lifetime. And I'm going to be covering every single move. Turn on notifications so you don't miss the updates. And then I want you to drop a comment and tell me, what's your biggest concern right now? Is it availability? Is it price? Is it storage? Because the more I understand where you're at, the better I can tailor this content to help you navigate what's coming. And most importantly, Have the conversation that matters. Not with me, with yourself. Look at what you're holding right now, your savings, your investments, your retirement accounts, and ask yourself one question. If the dollar loses another 10%, another 20%, another 50%, what survives? Paper promises don't survive. Digital account balances don't survive. Government guarantees don't survive. Physical metal survives. It always has. It always will. And the people who figure that out before everyone else are the ones who come out of phase 2 with their wealth intact. Don't be the person who understands this perfectly. 6 months from now, when there's nothing left to buy, be the person who acted when it mattered.